What is good, YouTube? Hope everybody is doing good. So, I don't know if you guys remember last time we was discussing the different types of stocks. So, we discussed blue chips, which are like, big companies with strong brands. Um, Apple, Tesla, Amazon, for example, and they always have to bring consistent earnings and business, produce cash flows. They also give sizable dividends, which is like at the end of every quarter, which is every couple months, they give out a certain amount towards you guys. Um, we discuss also growth companies, which are like companies that they grow consistently over a certain amount of time, which include Adobe, Amazon, Apple, also. Then we discuss speculative, which is like basically like stocks where you think you have to think about it and you're like, this stock is not as popular, but like it has opportunity to grow. Then we also discussed the different types of stocks part two, which was like common stock, preferred stock, large cap stocks, mid cap stocks, domestic stocks, international stocks, and growth stocks. We also discussed all of those. If you guys did not, if you guys missed that, just click the previous video. So, I would like to go back over this. I have gotten asked to ask this question. So, it's how much money do I need to start investing? So, typically, I would say 500 is a decent amount, a beginner amount. But you could start off with any amount, like any amount you're comfortable with. It could be $100. I would say anything under 100 is not really, it's not really good. But uh, so like for example, let's just say you find out. I would always suggest like buying shares, making sure that you know like the company before. We did discuss like what to look for in the company. Right here where it says you have to find a company you trust, research, and then have money aside. Um, I would always suggest 100 above. Because if you want to make money, you have to put in money to make the money. You know what I mean? So yeah. um, how much money do you need to start? Personally, I would just say minimum is should be 100. And like if you want to like if you know what you're doing and you want to make like gains consistently, I say like 1,000. That's like a good amount to actually start off with. Like once you learn about stocks itself, a good amount would be 1,000. 1,000 consistently. Oh shit. This is an easy question. The types. Okay, so I'm gonna break this down also. So what type of investment should I make? There's three different categories. There's stocks, bonds, and mutual funds. So let's go over. You guys already know what stocks are. That's if you guys don't know, I'm gonna be pretty upset. But so what are bonds? So let's type this in. I typed in bonds twice. I'm dead. Long day, guys. Trying to find like an example of bonds. Here we go. Okay. So there's gonna be different types of bonds. So like treasury securities, anything issued by the federal government, bonds issued by states or local governments, and corporate bonds are issued by companies. So basically these bonds are I'm trying to find let me see. So basically, they're like you could invest in like the government itself. I would say, they have a fixed rate of interest that's paid annually. So basically, what this means is, let's just say I put in $100. We did discuss this. It's like the dividends, where they pay you quarterly. But with this, it's a little more, I guess, on the safer side. That's why people invest in bonds because it's a little more safer. Um, and yeah, I don't really mess with bonds per se. I just don't really know that much about bonds. If I'm being 100%, I'm just going based off what I've read and what I know currently. So now we're gonna look up what are mutual funds, which is fairly simple. It's a company that pulls money from many investors and invests money. So basically, I'm gonna show you right now. I'm gonna just copy this and then I'm gonna paste it right here. So a mutual fund is a company that pools money from many investors and invests the money in securities such as stocks, bonds, and short-term debt. So what that means, I like going by visuals, so it's like so nice. Okay, so basically what it does, so you're an investor. This is you up here. You put in money, or investors come together. They put in money. They give it to the fund manager, and the fund manager basically they choose securities. So like let's just say I'm a fund manager, and you're an investor, right? What I would do is I'll be like, all right, whatever money you want to give me, come pass it. I'll take that money and I'll say, which stocks are good for you guys? Let me look. Let me think. I think stock one and stock two are valid. I'm gonna choose these. And what he does and his goal, his purpose is basically to choose stocks that will have high returns. Um, it's basically people that are in a way trying to invest like all across the globe. I would say also because this is not just US. It's also in Canada, India, and like China and Korea and all those other places. I would also say that like if you don't like know 100% on what you're doing, this is the route to go. Mutual funds, they provide a lot of good options. I was actually looking into it. Um, but yeah, sorry. Let's see. It says, when is it a right time to sell a stock? So, this is very speculative. I would say personal preference. So, what I mean by that is basically whenever you feel comfortable with selling a stock or a share, we're gonna call it shares for now. Stock is basically, it's like when you talk about stocks and then you talk about shares. Shares is like you own the shares. It's like your stock. Um, so I would definitely suggest that like let's just say for example, you buy, let's just say you buy what's a popular brand. Alright, so you buy a share Amazon, right? So you're like, okay, I'm gonna buy a share Amazon, right? The cost of Amazon itself, let's just say it's like what? Let's just say 200. Very expensive, but yes, there are shares that go for like 200 or so, and even higher. So let's just say Amazon itself is $200, right? And like I said, let's just say your minimum is you have $1,000 right now. So what you would do is you'd be like, I like this company. I like the way everything works. I'm going to buy 5 shares. So, because that equals a thousand. So you gotta go 5 times 1,000. I said 1,000 times 200, and then that would equal obviously 1,000. Right. So you buy 5 shares of Amazon, right, for $200. Keep this in mind, it's $200. And let's just say this was in let me see. Let's just say this was what, November? Let's just say November. So let's just type in November. Right? You buy November $200, and let's just say now it's what, January, February, and each stock price is what? Let's just say 250. Nothing crazy. So you do that 250, right? So what you're gonna do is you're gonna do 250 times 5, right? And then that would equal, and then sorry, this is big. So basically 250. Oh, my thing was bugging out for a second. My fault. Alright, so basically what you're gonna do is you could look at the percent calculator, right? So what this is, right? Let's just say, what was it? 250 times 5, right? And then it's gonna be 1250, right? And you're like, okay, what is like the percentage I have gotten from this? So what you do is you just subtract these two. Your total will be like what, 250, and then you'll be like, all right, out of $1,000 that I invested in, the amount I made was 250, right? This would be probably like a 20%, 25% gainer, which would be equal to 25% profit. Sorry about like I guess the amount of numbers. I don't know. But yeah, so this is based off your preference. So let's just say this is January, right? This is January, and you're like, okay, I made $250 already. What should I do? Should I cash out? Should I not? This is all based on your personal preference and tolerance, I would say also. So, for example, let's just say it's already January. I made $250. Am I comfortable with those $250? Do I want to make more money? Do I want to risk more time into it and see what happens? Those are all the questions you have to ask yourself when you are purchasing shares. You know, you can't just be like, hey, uh, I'm gonna just sell it just to sell it, or I'm gonna just buy it to buy it, because that's how you lose money. Um, yeah, that's pretty much it. I would definitely suggest, thinking about whether you want to buy shares, sell shares, think about all that, you know. Um, but I would say in this scenario, I I think in this scenario it'll be I think excuse me in this scenario I think it'll be pretty good because you made 25% of your money back, you know. So I think that'll be pretty good. Hope you guys enjoy, and peace.